General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Tuesday, 8/5/25. Tomorrow's no news. And then Thursday is the employment data. And I believe Big Dog earnings is Thursday. PMI came in red. Trump talked today. And yeah, tomorrow's no news. No red folder news tomorrow. This. CME Fed Watch. Let's see if that changed anything. I know that tariff kicked in. That was like rate cut coming. 82. Okay. Where's this? Where did the pen go? Oh, here it go. Okay. Went down to 82% off of PMI. This could be the start of this moving back down to 50%. That spike could just be shock. That shook from tariffs. Earnings. Tomorrow's Wednesday. Nothing. Yeah. No big dogs. AMD. That block is XYZ. That's not square. Yeah, that's it. That's it. So we really waiting on NVIDIA now, I believe. I think we got 7 last time I was looking at it. We did 7 out of the 10. Ain't no top 10 earnings for Nasdaq. I don't even see any sentiment plays. Nothing here to move the needle. Let's go to the dollar. Okay. Oh, undo. Okay, perfect. All right, so we hit that. Hold up. I'm gonna get good at doing this circle eventually. I think that outer line is just too thick. Okay, that's kind of crispy. Let's do white. Doing good. I don't know. They need to figure out a better way to make circles. I guess that's the best way we can get. Okay, so this alert, it's good. We respected the daily fair value gap, but we didn't expand lower. We're being held. We hit the daily fair value gap, but we did not expand lower. Price is being held. It's okay. We will wait. Today, Nasdaq. Okay, we didn't hit the target. All we did was take out Friday, and we came back to EQ of Friday. Okay, hold on, wait. Didn't hit the target. All we did was hit Friday's high and return back to the EQ of Friday. Let's see what we had on the weekly. Did we hit anything on the weekly? We came all the way back from this weekly order block level, but we didn't take out any weekly liquidity. That should be here. Yeah. Okay. No weekly liquidity was taken out. this inside week. Previous week's low is closer. We are in a serious accumulation. We're still under old daily high. This. Push this down. Current interval and below down to the daily. I guess this is it. It just looks funny from here. Yeah. Because it pushed up, it came down, pushed up through it yesterday. Today, pushed back down through it. We're not doing anything with this song. We're coming back down through here. We still have this liquidity pool that's untapped. It's really the only one that stands out. No other levels. This old all-time high, bounce, retrace. Um, 22,780.25 untapped liquidity pool. With engineered lows right above it. Take this off. Too many targets. Just one target. Yeah, that's low hanging fruit. Previous week's low will be next. Crashing through here. Push. Did we respect anything bearish? You can form fit a bearish reaction here. I would expect the H4 fair value gap bearish to push price down and clean up the messy sell side liquidity pools and previous week's low. Low hanging fruit is 22,280.25 bearish. Yeah, this is the target. Looks like we already came here and took care of business. Sales from here is permitted. Internal range liquidity here is permitted. Oh, that is red. It's just a weird looking red. Trading View has some weird colors. All right, let me add an alert here. Okay. Letter set at internal range liquidity. We'll look for a sale above highs to target 22,780.25. Alert set at internal rate liquidity sweep level. Okay, that's that. Let me check on my swings. Let's look at EU. Different layout. Okay, this is. We still need to come back up. We never came to the BPR level. We respected the daily fair value gap, but we didn't push above it. Didn't push above it, just like dollar. Did from an inverse perspective. We still have buy stops above the highs for when we retest my original entry level. Let's go here. Let's put this here. Put a page. I prefer to buy retracements. Yeah. We'll see if unemployment gives us a retracement. We didn't close. We didn't close this fair value gap at all. So retracements or the block highs. This old weekly high. It's prime liquidity. Yeah. I pretty much already broke that down. All right, that's it. That's all I had to look at for today. All right, y'all. Peace.